I've blown numerous accounts. My upline, he sold me a dream, I should say, and he even quit forex.
Wow.
He quit forex, right? And I had no one to turn to, no one at all. And when imagine that you're paying a subscription every month and you're blowing an account every month. Think about that every month, and I just keep on going, and yeah, to this day now that now I can say that I'm in a better place. I'm in a
Chris, do
better
me a
place.
favor. Do me a
Yeah,
favor. Put up that screen one more time with your
no problem, no problem,
because there's something that everyone needs to see on here.
no
Okay,
problem.
something that everyone needs to see. Both you, Cash, Jonathan, you guys, amazing testimonies. But guys, take a look at Chris's screen. Okay, take a look at his screen, and there's something powerful about that screen. I don't want you to look at the profits.
Them 0.01.
Thank you.
That's 300 pips. That's 200.
Thank you.
Yeah,
Oh my freaking
he's
goodness.
up to like at
That's
least 2,000 pips.
260. That's 230. That's 220.
Okay.
Just right there. Three.
Perfect. I'm glad you said that. That's amazing. Okay. Now, when you guys come to me and you say, Oren, listen, I need right now money. Chris, hold that screen right there. And
No
this is being
problem.
recorded because now that right there just it got me excited. I need right now money. Oren, I can't trade with a 0.01. Oren, I need to trade with a standard lot size. Oren, I need to shut up with the standard lot size, the 5 lot size. I need to make money right now. Look at that screen. 0.01, 300 pips. 300 pips on that trade. He turned a $17 account. Look at that, Euro USD. 1, 2, 3, 4, 5 Euro USDs. With the GBP USD, you might as well say it's the same thing. And then with the correlation pair, USD CHF, does the opposite of Euro USD. And look what he's doing. He's selling all of the Euro USDs and GBP USDs, and he's buying the GBP, the USD JPY and USHF, and he's selling gold. Gold is moving with Euro USD. And everybody's complaining about, I want to trade a standard. I want to trade 2 standards. That right there is a testimonial because he didn't turn $17 to over $193 with a standard lot size. If you combine all of the lots he had together, how many lots you got total, Chris? Let me see. 1, 2.
That's
Go ahead.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10. More than a standard. More than a standard. It's over standard.
Chris, that's not even a standard lot size, man. That's
Yeah.
not.
No. What? Yeah. True.
Okay. You're still under 0.20.
Yeah.
All right.
Yes.
0.14.
He only got a 0.14. Okay. 0.14.
Yeah.
That's a little over 10,000 shares. Okay? A little over 10,000 shares. Because the 0.10 is 10,000 shares. Look at the power in the lot size.
The thing about it is, right? Easy come, easy go.
I know.
You rank up your lot size to a big amount.
Mm-hmm.
You will win 1, you will win 2, and that brings something called euphoria. And then it's the third one where will screw you up and make you blow your account.
Now, I appreciate that, Chris. Real quick,
yeah.
You guys want to learn stacking orders, okay? We got a trader on this call, just like what Chris is doing right here. This is called stacking orders. We got a trader on here that would teach you how to stack your orders. We got a trader on here that's going to teach you how to get 300 to 500 pips in a trade. But the most important thing, with all these traders combined, we can't control your emotions. You have to control those emotions. Because the moment the market goes against you, that's when you start to panic. Thank you, Chris, for sharing your screen.
You're welcome, Aaron.
Perfect. The moment the market goes against you, that's the moment that a lot of you will start to panic. And you will say to yourself, oh my goodness, do you, and I'm gonna ask you this question. Do you think that the market is gonna give you, how often is the market gonna give you instant gratification? Well, you push that button and you're an instant profit. That doesn't happen every day. Number one, you gotta pay to play. You gotta pay to enter that trade. And something I want to speak to you all that was very important. So if you're entering a trade based on a trade alert, someone sent out a trade alert and say, hey, listen, here's a trade alert. We all use different brokers. Okay? You might use JFX, some might use FX Choice, FX Glory, Traders Way. Remember this, the brokers control the price. So if my broker price is at 1.338, your broker might be at 1.339. And if the trade alert is set at 1.338 and then the market just shoots up, you didn't get hit, you didn't enter the trade. Okay? When swipe trades send out those trades and you don't get triggered, just remember, your broker might be different from the swipe trades broker. And you don't know that. You don't know that. This is the reason why we try to teach you, don't be a PST, a professional signal taker. Learn how to create your own signals and take those. Learn how to create and take your own signals. All right? So let's go ahead and get this thing started. All right, we're gonna go ahead and get this thing started. You know, guys, you know how we play. I don't get in too much into mindset training because I can talk to you all day about that, but you're still gonna do what you're gonna do. All right, you're still gonna do what you're gonna do. I can tell you, guys, don't do this. If the market goes against you, don't do this, don't do that. You're still gonna do it because guess what? I do it. I still get emotional. I can make $1,000 right now and go, woo, yeah, baby. It's just knowing that you can do something different other than your job. You can't go to your job and make $1,500 in a day on your job. You have a set amount. But knowing that you can do this every single day is powerful. So team, let's go ahead and get right into it. All right, so Cash, you ready? I know you're feeling nice right now, brother. I know you're feeling nice. I know it. Nah, you muted right now. Unmute it. Unmute.
I mean, damn, I was kind of in the middle of one. Gee.
All right, so listen. You finish doing what you're doing, you know, because we all do what we do to get to where we need to be at. Because at the end of the day,
Now I got it. Give me a second. Oh shit!
all right, guys, let me just tell you right now, get your pens and your pads out. Nadine is about to get on you, Cash. Nadine ain't playing.
Let's look at a pair here. All right, cool.
Let me stop sharing my screen real quick. Jonathan, Chris, you guys are up next.
All right, let me go to the
No problem.
computer.
Have your and guys, everyone that's in the group right now, start writing your problems, start writing your issues, start writing what you want to cover.
Ooh.
It's an open forum. Start writing what you're struggling in. We got 36 people on this call right now. We should have 36 problems. 36 problems. Because if you don't have a problem, you wouldn't be here. We all got problems. I'm still learning. And watch what I'm going to learn today. I'm going to learn something powerful. Cash is up. Let's get it. I'm going to mute myself out. And Cash, I'm going to give you, well, you're going to start sharing your screen, so you're good. I'm going to mute myself out. Let's go.
All right. So let me just pull my ice pen out. All right, cool.
And And check this out real quick, team. Cash is showing you on the phone. So if anybody ever say they can't do it, he's on his phone right now on Zoom sharing his screen.
We about to light this up. All right, cool. So first off, whenever I trade, hope you guys have a pen and a piece of paper ready. I like to draw, so I'm gonna write out a lot of notes. When I trade, I basically look at the market through a lens that I've called trading with cash. Within that lens are three main components: Elliott wave, harmonics, and supply and demand. Now, whenever I open a chart, I tend to look at the higher time frames. So I will always start my analysis on a monthly, weekly, and daily chart. And the reason for that is fairly simple. When you understand that these candles, what actually makes up these candles and what actually forces them to move is a large institution or large flow of money. So these big, strong candles, and I'll zoom in so you guys can have a clearer picture of it. But let's go towards that view. Here we go. So these large candles like this represent like institutions buying the market at these particular price points. There is nobody on this webinar who can click buy and produce a candle of any significance on these chart patterns. So understanding who's really playing this game and whose game it is key. So when I go on a higher time frame, I divide my chart up into two halves, basically. Somewhere up here at the top of the market is where I expect to see some major supply. And that's going to be equal to sell. And somewhere down here is where I expect demand. And this is generally where I'm looking at opportunities to buy. If you trade harmonics, you understand that the patterns that suggest to sell are bearish, and all of them tend to look like W's. Suggest that price is going down. When you look at patterns inside of demand, most of them tend to look like M's because those are bullish, sending price up. One key component of the market, and it's very, very simple, is that whenever a market has an impulsive move, the market will then produce some sort of correction. This is what Elliott theory is about. That a market will have an impulsive move and then some sort of correction. My job as a trader, and what I found that works, is combining all three. Example, we're going to start off at this monthly chart first, and then we're going to scale down. Excuse me, I was in the middle of smoking, so give me a second. We understand that this is where we are currently. So when I scale down, I see that this big move here. I know that this is an institutional move because of the size of the candle. We're going to scale down now to the weekly chart because this is when it makes more sense. This impulsive move out suggests that somebody somewhere found that price was acceptable at this low and bought it. Some institution. State Farm, Wells Fargo, Chase, doesn't matter. Personally, don't care. When this market produces this big move out, 9 times out of 10, you expect that when it comes back here, it'll pop out again, that there are more orders, more pending orders within this level of demand to buy that'll send price out. If you understand what supply and demand looks like, you have a drop, a base, and then a rally. When price comes back to here for the first time, that's when you have a fresh supply zone, fresh demand zone. And this is ideally where you want to buy. That's one way to look at this trade. The other way I tend to look at this trade is this is an impulsive move. And this impulsive move is going to have some sort of correction. Now, the one I'll show you guys today, because there are other speakers behind me, is the zigzag pattern. And this is very simple. The market produces an impulsive move to the upside or the downside, it doesn't matter.
Take your time. We got time.
The market produces an impulsive move up. The zigzag pattern is very simple. A, B, C. This is generally where people buy. And this is also where you will find most successful harmonic patterns. This pattern was a Gartley. And this retracement is a 78.6. When you scale down to a lower time frame, because I want y'all to stop being scared of working on a higher time frame. It's nothing scary about it at all. So when you take this same picture, because everything that I'm going to show you guys is fractal, that means the same thing is on a lower time frame. You scale down to a daily chart. We notice that this is the impulsive move out. A zigzag pattern looks just like that. If we were trading this from a harmonic standpoint, we're going to fib from X up to A. B pulls back at that 61.8. C comes up. D at your entry is the 78.6. This gives you what we call a Gartley pattern, a bullish Gartley pattern. Your entry is at the 78.6. Generally, when the market gives me some sort of demand here, I'll put the stop at the 88. Not very high, depending on what the market is showing me. Oh, shit, excuse me. Depending on what this market is showing me. This is a strong bullish candle here. I would immediately, if you was in the group, I'm not sure what group I posted it in, but I actually told everybody to take the trade here, actually, with a stop going like 104.300. And your first target was, shit, where was this one at? I'm trying to remember where we got out at. There you go. And your first target was 50% of the move down. So 50% of this move down was our first target. And that's because you expect that this market, if it was a downtrend first, people are probably going to come back in here and short it. So you want to take your profit before they start to eat this up. So your entry was here and the target was here. Generally, you go with a 38, a 50, and a 61.8 as your targets when you enter most of these harmonic patterns. And let's just see how many pips that was again. 420 pips. And just to give you an idea of time, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 19, 20, 21, 22, 23. You caught 450 pips in 23 days. Is that okay if that's a standard? And that's over $4,000 in a calendar month? So what we actually prefer to teach you guys is a strategy that lines up with a pip goal. So the pip goal that trading with cash goes for is 200. If my pip goal is 200, this means that I'm going for 200, I'm getting straight out. That's from there to there, so don't let nobody tell you your phone is not amazing. You can't trade from it. I have 200 pip goal. 1, 2, 3, 4, 5, 6, 7. If my goal is 200 pips, is it okay if I did it in less than a week? And if this is a standard, yeah, that looks disgusting. This is a standard at 200 pips. That's 2K. This is a 0.10. Trade where you are. That's $200. Is that okay if that's T-Mobile? Sprint. Con Ed. Shit. Life. 0.01. And that's $20. That's the roll up.
Let me tell y'all about something about Cash. Cash is real life, okay? He's real life, man. So don't take anything that he's saying to offense. Understand that if you're trading using his concept, you will be spending that money on whatever it takes, whatever you need. So Cash, real life, man. Continue, brother.
Appreciate you, brother. Thank you. But this just gives you an idea of pip goal and in real life. Because a lot of times I think that we take it out of context. We hear, oh, somebody made 1,500 pips. Okay. That's nice. Can you do it next month? And the month after that? And the week after that? Can they keep doing that without blowing their account? Because what a lot of times what you guys don't realize is like institutions like JP Morgan Chase, they'll pay individuals like myself and you, right, to go into their organization and make 300 pips, right? Managing a multi-million-dollar account. As a Forex analyst, I think that is something like that. And I think the starting crazy salary is like over 100 grand, something like that. And it's not about the salary. That's just fun. It's actually that they only interested in 300 pips. And your account size is like 10 million. They're not interested in 1,500 pips. You got to understand what you're comparing your vehicle to. A bank account gives you what? I think it's like less than 1%. This is where most people's money is. Real estate is around 40%. You got about 350K you could play there to get 40% return on their money for the year. So don't worry about your money for the month. Think about people who make money. They think about money from a yearly perspective. This is what you're comparing your rate of returns to. A bank, real estate, CDs, mutual funds, and you have your little $100 account that you consistently make 40% a year on. Well, let's just say you do 40% a month. That's only 400 pips. You consistently making $40 a month. Someone will give you money to do that for them. If you can do 400 pips a month, 300 pips a month, 200 pips a month, 20, 30, 40% return, that sounds about right to people with money. That doesn't sound like a get-rich-quick scheme. Let's look at this we looked at it from a harmonic standpoint, but I actually want to show you guys how the harmonics and the wave comes together. So we've seen the impulse out. We know that this is the 78.6 off of this zigzag pattern. What I'm going to show you guys is what the market is called commonality. And that's where you get several of these little points to line up for you in what's called the trading box. So the first way you measure your harmonic pattern, because they have to measure out, take the impulse up, and wherever that middle pivot is, that B, I always put a horizontal line in there because I'm using my phone. So I'm trying to be as precise as possible. I'll zoom in if you guys can't see it, but this right here would represent B. And this overall, the pattern just looks like an M. So just think about harmonics as just M's and W's, that's it. It's nothing confusing. It's nothing amazing about it. They're just M's and W's with some Fibonacci to them. After I determine where B is, I actually flip the fib tool. So you use this, you can use the same one. I flip the fib tool and I go from B up to C. When I measure from B to C, this is going to give me what's called an extension. All of these numbers after 100 are called extensions. So that means that basically you win 100% of the way plus 13, you win 100% of the way plus 27, you win 100% of the way, so on and so forth. That 127, we're going to put a horizontal line there as well. Let's put it here between that 127 and 141. Next, if you understand, I'm not even going to assume you understand it. Whenever you're looking at Elliott wave theory, the impulsive move has a 5-wave sequence in it. So somewhere within here, there's a 5-wave count in there. You could break it down if you want to, but I'm going to guarantee you that in that impulse, there's a 5-wave count. After a 5-wave count comes a correction. So if you have a 5-wave count that looks like this, at the top, at the peak, there is a corrective pattern that takes place. That corrective pattern here is called the zigzag. That zigzag pattern comes in at different Fibonacci levels. Sometimes it comes in at the 38, it can come in at the 50, it can come in at the 61.8. And the very last one that it generally kind of plays around with is the 78.6. Whenever you have a 5-wave sequence going up and 3 waves coming down, this is called a complete cycle. Whenever you have a complete cycle, disregard the spelling, this is where C comes into place, and this is where most professional traders look to buy. Because 9 times out of 10, you are going to miss this entire impulse. That is by design. Do not catch the impulse. I want to say it again. And emotionally, I know you're going to probably do whatever the hell you want anyway. But I do have to stress this. Your goal as a trader, if you're looking at trading the way we traded, the way I traded, is not to catch the impulse. It is to let the impulse happen so you know after the impulse what the correction is going to be. This correction is 9 times out of 10 a correction and a harmonic pattern in one. This is where you find high probability, low risk trades. This is where you find an entry going from the monthly chart, scaling down, that's 200 pip risk with a reward of like 700 or 800 pips. So these 2 lines, one line here is at the 78. The other line is the extension, which is at the, this is the extension at that 1.27. This is around that 78, or the 88, I think this was. And then you're going to fib the entire pattern. You see how these zones, 61.8, 61.8, 78.6, you have commonality in here. This is why this became a very high probability trade. You had the impulsive move out as well as the correction. Most harmonic patterns, there's a guy named Scott Carney. If you really get into harmonics, he developed like the strategies on how these patterns kind of shaped out. They noticed that these harmonic patterns had ABC corrections in them. And they tied in with what Elliot was talking about. So that's how you look at it on the, what pair is this? USD JPY, and ideally you would have entered here. And that's how you time that move. That's how you figure out what the hell is going on your chart. You figure out where you're at. I break that down from a monthly chart down to a weekly to a daily. So a 200 pip stop is nothing scary. It's only $20 on a 0.01. And you can easily start flipping accounts, accumulating the pips along with a pip goal. So the target is 200 pips. You get your 200, you get out the game. And then you do that consistently. And then you can really like brag about what you're doing. So what I want to show you guys, hold on one second. I'm going to stop sharing my screen for a quick second. I pull up some pictures over. Okay. Oh, I got to pull up a picture real quick. I want to share this with them.
I hope you guys are taking notes. You all should have, the button does appear on my screen. All right, for everyone that requested recording, you should have access. Just try to resubmit it. If not, then I'll upload this later on. But I want to appreciate everybody who's tuning in right now while you're driving. You know, that shows dedication, right? That shows hunger. You know, the information that Cash just shared right now with harmonics. Do you guys understand how simple harmonics is right now? You know, when he drew his fib from the top to the bottom and showed that harmonics is nothing more but M's and W's. M's and W's. Okay, M's and W's on the harmonics. That's powerful right there. Powerful, powerful, powerful. Yeah, that's right. Hey, Cash, I wish you would have put up the zigzag pattern to show them how simple it is. Oh, but you don't have zigzags on your phone.
Nah.
Oh, okay.
But you don't need it. You got eyes.
Hey.
You got eyes, you know.
That's right. That's right. That's right.
Let me see. It was another one I was looking at.
Nadine, lock your doors. No more customers.
I'm sorry, guys. I'm just looking for one more thing here. Where was it?
All right. Chris and Jonathan, get ready. If you guys thought your mind was blown before with Cash, you know, get ready because these two guys right here, the way they see things in the market, every time they speak, I learn something new.
Oh, perfect. All right. This is the last one, and I'm out of here because gotta be high, man. Yeah. All right. So I want to show you guys something. This is one of my favorite. You guys are actually going to see a pair that a young lady that I was mentoring traded, and she took like a $7 account or something like that, and she caught 500 pips, and I think it was like 2 weeks. So I'm gonna show you guys exactly how we did that, going from a top-down approach, and then tying in Elliott. And I'm gonna show you guys a lot of the patterns as this one is more completed. So allow me not to bore you, but immediately I want to find, let me see. This will work. Impulse. This is one that impulse. These moves down are called corrections. Moves with the trend are called impulse. Moves against the trend are called corrections. Again, impulse. If you were involved, and this is very funny, but if you were involved in some of the Bitcoin excess and hype, you were actually involved here, which is the worst time to actually buy anything, because emotionally this market has seen 3 highs, and the institutions who bought down here follow a pattern of buying and selling, and when they do that. So this pattern here is called the Elliott wave. This is the first part of it, the very basic part. And I'm actually going to show you this on Euro GBP. So I want you to take this picture and put it in your head. And then when we look at Euro GBP, we'll just map it out. Now, 0 to 1 is an impulse. 1 to 2, this pullback in here is a zigzag. I'll show you that. This pattern here is called a flat. I'll show you that. And of course, you hit wave 5, where this became a Gartley pattern that we sold and caught 500 pips. So taking this picture, because the market is fractal, this same 5-wave count is on a lower time frame. I go down to the weekly chart. This same 5-wave count is on a lower time frame. Okay? Impulse. A, B, C. 50%. This impulsive move, remember, it has 5 waves within it, and it's going to have a correction. A, B, C. This overall correction is where smart money rebuys. Whenever you look at a move that has an impulse and then a correction, it's 1. You see how that looks? It just looks like a straight line up, pull back down, right? Remember buy the dips? Anybody heard that saying before? Buy the dips, that bullshit? This is where it comes from. What you're seeing is what the terminology is extrapolated from that a lot of Forex traders use, so you can stop being confused by it. Buy the dips is nothing more than buying the pullback. So what I'm going to show you is how smart money times that pullback. We know that there's an impulse. We know every impulsive move has a correction. That correction is going to come in at a Fibonacci level between 38, 50, 60%. One of those numbers, one of these Fibonacci retracements are going to give you an entry point. You can look at on a lower time frame and find candlestick reversal patterns, whatever makes you comfortable for entry. If you're trading your account the proper way, and let's just assume that you have $1,000 in your account. As per IML, you know that is at 3%. Your max position size is 0.01. 0.03. On $1,000, a 0.03, that's it. So if you broke that up into 3 trades for the month, that's it. A 0.01 on each trade. That is proper risk management for your account. Let's assume if I taught you that and you know that, and you put a 0.01 here, you put a 0.01 here, and you put one more at the 61.8, but it never picked it up. So, oh well. You got a 0.2 running at that 50% Fibonacci level. Because you know, as a trader now, every impulsive move has a correction. There's no need to get excited about a market that just shoots the hell out. Wait for it. Smart money waits for it. Get that pullback. Get that thing cheap. So you got an impulse, then a correction. That's wave 1. You get another impulse. You don't get excited. You see this move. You know what's up. Every impulse has a correction. Whenever you see the market shooting up a couple hundred pips, couple thousand pips, you smart. You say, fuck it. I'm going to catch it when they come back. That market shoots up. You know every impulse has a correction. This correction pattern here happens to be called the flat pattern. You know that it's a flat pattern when A and C are about the same point, same price point. Let me get this out of here. Same price point. B is here. This is called a flat pattern. You buy C. Your target when you buy C is the high of wave 3. You catch that market going up. You miss this move up here. That's okay. You know every move has an impulse and then a correction. You know you're going to get at least 3 impulsive moves. You're going to catch this last impulsive move. How do you time it? How do you know that this is the impulsive move? How do you know that you're at that C level? %50 of this impulsive move out, you buy here because you're waiting for C, A, B, C. If it broke below the 50% and came down to the 61.8, you know that's a zigzag pattern. Zigzag pattern, leg C breaks below leg A. Flat pattern. A and C are at the same price point. You buy this market up, you set your pendant, you see what's going on. You use the daily chart, you get a daily close. Your target is the top of this here, so we're not even gonna go crazy. Is it all right if you grab 900 pips? Let's see how long that took us.
Beautiful, beautiful, beautiful. Hey, Cash, you know I don't want to rush you off. You know I don't want to give the other guys real quick. Can you hear me? Testing 1 2. Can you guys hear me?
900 pips in 20 days.
Testing 1 2.
I'm here and you are on.
Okay. Perfect. All right.
And lastly, you get those 900 pips in 20 days. You get this little harmonic pattern here right at the end to tell you when to get out.
Cash, can you hear me?
Yo.
Oh, okay. I was like, what's going on? All right, so listen. Beautiful. I hope you guys just learned a lot from Cash. I can see you. Give me a thumbs up. Give me a thumbs up if what you just learned from Cash was powerful. Okay? You just learned something from Cash that was powerful. So you know what that means, right? Hey, Chris, what's up, brother? You ready?
I'm a bit ready.
No, Chris, you got to bring the heat. You got to bring the heat.
I'll try my best, guys. This is a freestyle. I wasn't aware.
Cash just freestyle. Everybody freestyle.
Yeah.
Listen, do what you do.
No problem.
All right, guys, here we go. We got Chris right now. Cash just gave everybody an eye opener. Your eyes are open wide. I want you to write down inside of the chat what you just learned from each speaker that came on. What you just learned. Is this going to change your trading style? Woo! Let's get it, baby. On to the next one.
So, guys, I trade similar to Cash. However, I do it a little more simple. And what I want to show you is like the power of trend lines. So what I can say is I strongly believe that harmonics run the forex market, right? And the reason for me saying this is that take a look at this chart right here. This is GBP USD on the 4 hour currently, where we at right now, right here. So let's take a look at something. Look at this trend line. Look at this trend line here. Look how much respect we got to this trend line. Price came up to here, we came back down. That's how we got the trend line, right? From these 2 points here. And then we pull our trend lines. Now look at this. Price came up to here, came back down, bounce, and sell. Came back down, bounce, sell. Came back, sell. Came back, retest, and then we offer buy. But look at this. This is why I say harmonics run the forex. Look at this. Now I'm just showing you the harmonics. If anybody would like, after I can go into details as to what pattern it is, etc., etc. Now look at this. Look at this harmonic here. All right. Let me show you how many harmonics is in this. It's gonna look a bit right. So it's gonna get a bit clustered. So look at this, guys. Let me. All right. Hopefully you all can see it properly. Right. So look at this. Harmonic number 2, number 3, number 4. No, that's a retracement. Number 5. Number 6.
Not letting me record.
Can you all see how many harmonics is in this chart? Now, if you know harmonics, you could have probably caught the entire of this GBP USD. However, for the last, what happened is we did not. Well, this last harmonic failed. However, if you know that this was a cipher forming, you would have caught the sell from C, right? However, let's take a look at let's take a look at trend lines, right? Let's take a look at trend lines and something called market structure, right? Let's go on gold. XA. Let's go on gold. Take a look at trend lines, right? Drawing simple trend lines, right, can make you catch a lot of pips. So if you start from the weekly, right, and you draw a trend line from right here, it will make sense soon, don't worry. So this is your first trend line. You then draw another trend line from here to here. You're just trying to connect 2 points, basically. And then you can move down to the daily. And what I usually do is I fix them. And then now I change the color of my trend line so I'll know where I pull them from. Right? trend line to the first point here. This to this point got this sell here, right? And great. So let's see when it touched this trend line here, you can put a horizontal line. As you can see, it's on a support. So if price was to come down to this point and it's on the resistance, you know, it's a valid support here, right? Or there's anything specific that anybody would like me to teach, because I mean, Cash basically covered the most advanced stuff. So if anybody could recommend something right now, I have no problem going into details about it.
Perfect, perfect, guys. Type those questions. Type those questions. Yes, Cash went over harmonics like a boss. You know, and when you guys, you know, Chris, you and Cash, you guys specialize in the harmonics.
Yeah,
You know, so ask those questions, team.
yeah,
All right,
because
get your teams on this call right now.
because
Okay.
I could basically go over what I want to go over, but it may not be a mutual struggle that somebody's having, and it could be basically,
Well, it
you
can
know,
be an eye opener. You know,
yeah,
it can be an eye opener. So
yeah,
go over your style of trading. Okay, your
yeah,
style of trading, because again, someone else may come in and say, "Hey, I want to learn that," because we may have some shy people on this call right now who just, you know, just too scared of. Look at Jonathan right now. He's scared of trading. Okay, so go start covering something right now and your way of trading, and then someone could say, "Hey, I want to do that too." So let's
yeah,
do it, brother. Let's go.
yeah. So, the point I'm trying to make is with this trend line right here. Now, listen, Cash basically went over a lot of advanced stuff because Cash is an advanced trader, right? So what I'm just showing you, like simple little things, right? So look at this right here. With this trend line connecting to this point here, you could have possibly caught this sell. Now, what you can also do is you could put a fib from here to here. And you can see it's at the 61.8. And you can see it's at the 61.8, right? So you could have caught this move. So basically, look how many pips is that? 335 pips, right? Simple. So I would I would like somebody to recommend a struggle they are going through right now, and we would try to make it, you know, go away. So on the chat, or anybody, or anybody. So Ron said, don't understand why the double trend lines. Now, the double trend lines, basically, you just pull in, like, basically, like a simple way is that you can draw a lot of trend lines just to give you a little bit of confluence as to where you are in the market, right? Now, this since nobody is really recommending something right now, I would just like to show you all something
I'm
on
so sorry. It is no way that's possible. It is no way a group of 34 traders, no one has a question. That is impossible.
yeah.
Cash, I have questions, but then they're being answered as time goes along. And that, like, because I had a question about these double trend lines, and I remember earlier on during the week there was a pair that I was looking at, and based on the movements, I realized I was seeing two areas where price would. I was seeing two different trend lines. Now I did that in terms of drew two different trend lines, but I just figured I was doing foolishness. So I want to understand if there was any logic to what I was doing, because price at that point, there was a main trend and there were little trends going on within the main trend.
So what pair you were looking at?
I can't remember. It may have been Euro USD or one of the. No, it wasn't. I don't think it was a GBP pair. You know, it may have been Euro USD, but I
All right.
don't think it was the.
Well, well, listen, we'll get to that, right? So let me just show you something that Warren preaches a lot.
Someone is asking right now,
Yeah.
how do you properly identify a fake out?
Okay. How you properly identify a fake out? Well, let's see somewhere on. All right. So a fake out comes in the shape of a head and shoulder. That's how I know it, right? So basically, what you're looking for is those V bottoms, right? You're more looking for those V bottoms. So as you can see, look right here. We have something like a V bottom here, right? And let's make this a bit bigger. Basically, the fake out, you would get it while drawing your support and resistance. And let's see if we could find one on this chart. Well, there's basically, I mean, it's hard to identify on this chart. All right, let's see if we could find it on another chart. All right, so all right, look simply right here. Just look, basically you're looking for the head and shoulders, right? And on the head, more than likely you would find the fake out, right? As you can see, like the price came down here and bounced here and break the trend line, came back and retest the trend line. To me, that's how I identify the fake outs. Another thing is I mostly look for the harmonics, the trend lines, the head and shoulders, inverted and regular. That's how I trade, right? That's how I catch my pips. Right? So is there any other questions?
They basically saying, when you see the inverted head and shoulder, is that similar to a stop hunt?
What's a stop hunt?
Stop hunt when the market goes, or the market maker drops the, let's say if you have a stop loss in a certain area, and then that fake out pushes the market down and takes out your order, and then pushes the market in the direction that you were originally going in.
Well, basically, how I treat the inverted head and shoulder, I wait for the buy at the right shoulder, or that is for the inverted head and shoulder. So, with this, we should be able to spot it, right? So, as you can see, with this pair here. This is one of Oren's strategy that he teaches us. And you guys you pardon?
You building the house?
Oh, sorry. So basically, listen. This is just a simple strategy that Oren teaches so that you can know where you are in the market, right? So this is touch number one. You put a line there. Touch number two, you can put a line here. Touch number three, and exactly where it broke our trend line. Number four, right? Then you switch back to your line chart. I mean to your candle, and as you can see, um there's touch one, come back down, sell, came back down, sell, came back up, and exactly basically we put a buy limit where the trend line is broken. So right here you would have caught the buy. Not only that, but there's an inverted head and shoulder forming right here. Basically with this move or with this strategy, you'll be able to quote this whole entire buy by the Euro NZD, right? Um, that's basically 493 pips, you know. Um, hey, Oren, can Jonathan take over? I'm going to look for something. I'm going to look for something so that I could actually give a little more value on this webinar right now.
Perfect.
Because I basically I got shocked when I heard I was going to teach, so I want to give some value to them, so I'm
Listen,
gonna yeah
I appreciate you.
yeah
Always appreciate you. Just remember this.
yeah
Okay, guys, if you come to this webinar, and I know you are an educator, I know you are a teacher, be prepared. Be prepared to educate. But no, Chris, you did an amazing job.
okay,
Showing
thanks.
everyone, going over the basics, showing them how harmonics can be just displayed all over your chart. So
Yeah.
guys, give it up for Christian. I said Christian. Chris
Krista.
and Cash. Harmonic bosses right there, guys. Come on, harmonics right there. Okay. So, with that being said, Jonathan,
I'm in the house.
listen. Let's wake everybody up right now. Let's wake everybody up. We still got the same 34, 35 people on this call. They could have easily left a long time ago.
Nice.
But they're getting value because we got an all-star lineup. And the beautiful thing about what we have right here is we're developing new traders upon new traders upon new traders. I'm looking for Manny Grulon to be the next trader. That's right, Manny. I said you're going to be the next trader on here hosting. Then I'm looking for Nadine to be the next female trader boss.
Come on, girl. Come on now.
Come on now. Darwin Young, Jai, to be the next trading boss. That's how you develop a team. That's how you develop a team of leaders.
Yes, sir.
Yo, JC.
What's up, brother?
Visionary lifestyle. You ready to drop some nuggets?
Yes, I am.
Hey, the floor is yours, man. Let's do it.
Thank you. So everybody, let me hear you guys. Let me see you in the chat. You guys awake? Let's go.
Are
You ready? You guys are ready?
We're ready.
Come on, make sure y'all paying attention. Let me get a one in the chat.
We ready. We hot.
You are.
You ready, bro?
Ready.
All right, guys. So thank you, Cash, and thank you, Chris, for going over your strategies and the definition of, supply and demand, harmonics, and Elliott waves. So, guys, when I first started trading, right, my focus was to find a strategy that's gonna help me make money. And Okay, I'm just making sure I'm not mute. What's gonna make me money? So I've been focused on every time I found an educator, a mentor or an educator to train me how to trade the market, their strategy wasn't working for me. I don't know why. So what I did was I stepped back, I took a step back, and I went into student mode. I went on to student mode, and I went learning from every trader out there, right? So the first one that grabbed my attention was Oren. Oren, simply, he taught me head and shoulders, inverted head and shoulders, double bottoms, triple tops, trend line break, all of that. So breakout retest. Breakout retest make you a lot of money, guys. It makes a lot of money. Then to take my education up to another level, I started learning harmonics from Cash, supply and demand from Cash. So Cash took that to another level, to my strategy to another level. Then I had to learn Fibonacci's. So I went to my Fibonacci guy, which is our partner, A-Dot. A-Dot broke down Fibonacci from head to toe. And I was like, you know what? All right. Now I got to put my strategy together. What am I going to do? So just like Cash broke down in the beginning, he looks for multiple patterns, basically to give him a confirmation of which way the market is going to go. And when you put all these patterns together, I basically call it a confirmation trader. You know, all these patterns are giving you confirmation where the market is going to go. So I put everything together. I put the head and shoulder, double top, triple bottom, Fibonacci, harmonics, supply and demand. I put it all together and made it mine. One thing that I love to do I love stacking orders. I'm a stacker. Like if I show you some screenshots, you'll see it. My charts look like Christmas. It's all green and red all over the place. All right, but let's get on the charts, guys. Can you guys see my screen?
Yeah.
Let me get a 1 if you guys see my screen. All right, guys. Gotcha. I hope you guys took notes when Cash was breaking down the definitions on supply and demand, harmonics, because that's the best way anyone can ever break it down. All right, good. Everybody's seeing my chat. Let me zoom in. All right, so the first thing I do is I go into the monthly. I zoom out, completely zoom out. I want to see what's going on. What have the markets been doing since 1992, right? So over here, we already see that the market was in consolidation over here. So we have an inverted head and shoulder. Push the market all the way up. All right. Now let's zoom in, right? Once we zoom in, we see that the market over here to the left. You always want to look to the left because all these candles are basically telling you a story, okay? For those that are trying to understand what are fake outs, so let's say, for example, if the market created a high, right? It created a high already. Market dropped, came back up, and created another high, but it did not close above that resistance. It closed below that resistance. That is a fake out. Okay, guys? That's a fake out. All right, so now
Wait, repeat that again?
When the market, let's say, this is the current market right here, right? The market came up, had this impulse move all the way up here, created this high with a wick. Okay? When the market came back down, it hit a level of support and pushed the market all the way up, creating another high, but the market closed below that previous high from that wick. This is
okay.
Whenever you see these wicks, these are fake outs. All of these wicks are fake outs.
Okay, I see. So that means the market is still going up?
It means that the market hit a level resistant, and that's it. The market, you should not be buying up here.
Okay.
If you notice, it hit a level, it created this high, and it pushed the market all the way down with a large candle. It came back up. It tried to break through it, but we got another large candle. You should not be buying up here.
Thank you for that. I understand now.
It sounds good. All right, so let's get back.
After you ask your question, please mute yourself out immediately. Too much background noise.
All right, guys. So, so we saw this inverted head and shoulder happen down here. Then we have an impulse move. This is important, guys. When you see an impulse move, that means we have a demand zone. You want to look for a large candle leaving the zone. Let's extend this. Go to parameters. 2020. Boom. Oh, no, let's go further than that. Everybody draws their supply and demand is different. The way I draw mine is, let me zoom in. So I look for this large candle breaking out of the zone. This right here, this is all consolidation. This nice wick up here, it's the top of my box. The bottom of that will be the bottom of this doji right here. So this is all my consolidation zone right here. And then the market broke out with a large candle. It has not retested. So I zoom out again. Guys, this is the monthly, okay? So we're just marking up the charts. We're not placing no trades. We're not doing anything yet. So market tried to come down here, but it failed to retest. If you guys see it over here, it failed to retest. So now I know that the market is going back up. Market went back up. We have this nice impulse move. Boom. Now what the market did, now we have another large candle leaving the zone over here. And then we got into consolidation. Another way, if you can't find a consolidation zone, you put up your line chart, find your box, boom, boom. You got a demand zone, a supply zone right here. All right, let's bring back the candles. Perfect, perfect, perfect. Zoom out. Let's change the color to green. Let's leave that red. I'll see you guys later. Love you too. Turn this green. So you guys know that's your demand. So when the market comes down here, you're looking to buy. When the market hits up here, you're looking to sell. Okay? So the market broke out over here because we had a consolidation. We had consolidation over here. Market broke out. Boom, we got one touch. This is one touch. Market came back down, came back up. We have two touches, right? Next thing you know, the market came up here. We have another consolidation with three touches, but we still haven't touched the demand zone. So now I know the market has to come back down to the demand zone because we have a fresh demand zone. Not one touch yet. So now let's zoom in. Now we're in the weekly. We have another impulse move right here. Let's draw a trend line. We have another impulse move right here. Now we're looking for our demand zone. This all right here is consolidation. This is the beginning of the impulse. This is going to be the bottom of my box. And this is the high of my box because that's where the market broke out of. Extend this to 2030. Market broke out. We have one touch right here with this wick. And then the market went and skyrocketed. Okay? Now you guys see, now we see these impulse move. Now you know within the impulse move, there's a 5 wave. Cash broke that down. You have this impulse up here, and the market came back down. We have 1. All right. And we got 2. 3. Excuse me. 4. 5. So now I know the market isn't going any higher than this. Now I need to look for another pattern that's going to push the market down. Okay, so then I zoom into the daily. Let's see what's happening on the daily. If I zoom all the way back out, I see that the market created a left shoulder. We have a left shoulder over here. We have the head because the head always breaks above. The head is always higher than the left shoulder. And also, wave 5 has to be higher than wave 3. A few pips above is considered wave 5. So now I know that the market has to form the right shoulder in order to push the market back down. So the right shoulder has to come around here somewhere, right up here. So if we zoom in, we look for another supply zone within that wave 5. Zoom in. Okay, so up here we had a doji. Got a doji with a large candle breaking out. Let's extend this all the way to the right. Make this red. As Chris was saying, the market moves in M's and W's, correct? So the market had an impulse going down. Let me turn this green. Make this green, boom, perfect. And then we had a correction back here. Then the market pushed the market all the way down here. So this is basically telling me something. So now this is where I bring out the Fibonacci. I measure from here to here. Let me change the color of this Fibonacci. Let's make it green. Perfect. So your impulse move from your harmonic will always be, it will start with X. So we have X up top. BS A at the bottom of that impulse. Excuse me. We have B as the correction. And then we have C as the extended correction right here. All right. So now my question is, if the market has to push up here because we have no retest on the supply zone, I'm looking for D. D, if C is below, D will always be above. So D has to be up here. So now I need to look for the measurements of this Fibonacci, of this harmonic pattern. So now let's fib it. From X to A, the retracement of B is a 50% retracement. We have a 50% retracement up here. Now to get C, you have to measure from, fib it from A to B. Make sure you get the bottom of it. Okay, perfect. Boom. So at C, we have the extension came all the way down to the 141. Now your next question is, which harmonic pattern is this? Cool. Your next move is to look for your cheat sheet. Your cheat sheet, you go to Google, harmonic patterns. Images, And which one is the one? This one. Right, let's zoom in. How can I zoom in? Click on this. Perfect. So these are all the harmonic patterns that you should be looking for. Now, these numbers are the measurements or the pullbacks and correction of the Fibonacci. Okay, guys? So now we're looking for the process of elimination. So now we have to eliminate all these patterns to confirm which pattern we have. Oh, wait, let me see if I can save this on my desktop. Oh, I have it on my desktop. So let's delete that. Let's come over here, minimize this, double click, bring this to the side. Perfect. All right, so our correction for B is
It's
a
a
50.
crab.
Oh, you got in too fast. And that's not the answer.
Oh, damn.
All right, guys. So let's take a look at the back. So from X to A, the retracement to B has to be between a 38.2 and a 50% retracement. We're gonna look for a W pattern. Okay, right here. Boom. Now we have a 50, so that's correct. B is correct. Now from A to B to get C, it has to be between an 88.6 to a 38.2 to a 88.6. And over here we have our C is a 141. That's a 141. It's not a bad pattern, so that's a no-no. Now we go to, that's not a bad either. So now we're gonna go check out the Gartley. Retracement to B has to be a 61.8. We have a 50. That's not it. That's out. We have a crab. Crab is between a 38.2 to a 61.8. We have a 50. 50 is in between there, so that's okay. A to B to get C is 38.2 to 88.6. And our C is a 141, so it's not a crab. Let's go to a shark. So a shark, we have from A to B, I guess it can be between 38.2 to an 88.
So on the shark, Jen,
What happened?
on the shark, the B actually doesn't matter that much. That's why
The
there's
B doesn't matter. Yeah. Okay, that's why there's no
no
measurement there.
value there. No.
Thank you, Brother Cash. So all right, so B doesn't matter when it comes to the shark pattern. So we have a 50, that's fine. Now our measurement to get C has to be from A to B, and we have a 1.13, which is a 113, and a 1.618, which is a 161. So we have a 141. So that's in between. So that it could be a shark pattern. Let's take a look at the other, a few more patterns, and then.
Why doesn't it matter?
No, I said it matters. I said let's take a look at a few other patterns just to see if it can be another pattern, because it's not only gonna be one pattern. It's gonna be a few.
Oh, okay.
Because you want to see which way the destination for D. You know, B and C can be the same, right? Can be confirmed, but the D can be different. The B can be shorter. The B can be further. So it has to match with my supply zone up here. If it doesn't match with my supply zone, then I won't trade it. So it could potentially be a shark. The butterfly. The B retracement has to be a 78.6. We have a 50. That's out the picture. The crab. B retracement has to be 88. That's out. We have a 50. No crab. Cipher pattern. B retracement has to be between a 38.2 and a 61.8. We got a 50. That's correct. From A to B to get C is between a 113 and a 141. That's also correct. We got a 141. So this can potentially be a cipher and a shark pattern. All right, guys? Now you want to see the destination of each pattern's D. So for my D, from X to get D, you have to measure X to C to get your destination of a 78.6. Okay, so let's go back to the chart and let's use a Fibonacci measure from X all the way down to C. All right, my 78 is right over here. Let's change the color of this. Let's make it green. And now let's take a look at the shark pattern. So the shark pattern will stop, D will stop at the 88, between the 88 and the 113. Okay. Guys, be careful of marking up the screen. Can someone erase that real quick? I don't know, it's distracting me. Okay. All right, guys. So the shark, so we have the cipher pattern all the way up to the 78, and then we have a shark pattern all the way up to the 88. Okay. What's the next move? Okay, next move is, now we know that the market is shooting back up to finish this pattern. So now I'm going down, break it down to the 4-hour. Now we're looking to get in the trade. I see that the market created an inverted head and shoulder. Okay, we had this fake out over here, and then the market came. We have the left shoulder, the head, right? We have a breakout, market retested, came back up, came back down, retest for the second time, and skyrocket. All right, so this is how I get into my trade, and this is how I also stack. So let's say before the right shoulder was formed, right, guys? We had this large candle breaking out. Large candle breaking out. And we also had a retest. Let's say none of this happened over here to the right. None of this, but we had this retest. This is where I saw the market to get in the trade, all right? So I draw my trend line from this, from the left shoulder, breaking the head to form the right shoulder, all right? So I drew it from this wick, came to the side, drew it to this, right? And then the market went back up. I see that the market also broke out of this zone over here with the large candle. So now I know the market has to come back down for a retest. So I'm going to have a buy limit right over here, right? So once the market broke out of this, markets came back to my zone, right? Picked up my order. Now I'm in the order. Now let's say I'm in drawdown. How many pips am I in drawdown? I am, what's that, 20 pips? All right, I'm in 20 pips drawdown. I know the market is going to heaven. I know it's going to heaven, and I am going to eat off everything, right? So now I'm going to look for potential entries. And my potential entries to stack is I look for wick entries. So I look to the left and I look for strong wicks. I only look for strong wicks, especially wicks that make sense. Okay, like this one right here. We had a consolidation and the market broke out with a large candle. Let me change these colors for entries. Entries I'm going to use, let's use, no, that's too bright. That's too bright. That's too bright. Let's use, okay, let's use purple. Perfect. All right, so before this, the market came down here. I had a pending buy. Market came up, then came back down for a second retest of this trend line, and it picked up my buy order. Now it's consolidating here, right? Before this large green candle happened, I marked up this zone right here, this resistance zone, because I had a consolidation with a large candle over here. Boom. This is a potential entry for me. Next potential entry for me would be this one right here. We had a large candle came up here, it had a level of resistance, and it rejected that price all the way down and formed this doji. That's another potential trade. Next potential trade will be up here. We had a large candle, and it closed below with a huge wick, came back down with a large candle, and then another large candle came out and broke out. Okay, guys? So now we have 1, 2, 3. We have 3 potential entries already. We are already in this trade right here.
So you determined the trade because of the wick.
I determined these entries because these are levels the market respect.
So, Jonathan, do those candles of the wicks that you're using to determine where you're going to stack your entries, is it a case that these candles would be just before you have an impulse, a long candle forming?
You see, these candles all represent 4 hours, but if I break it down to a smaller time frame, you'll see you'll see some of these candles retesting these levels.
Right.
So, for example, let's go to a 4 hour. This is 4 hour. Let's go to the 1 hour. Let's see what's happening in the 1 hour. Boom. Okay, that's happening. Let's go to the 15-minute. Perfect. Okay. So this is me. I entered, the market was in consolidation right here. Super consolidation. This was for like maybe how many days? From the 26th to that was like about a day and a half the market consolidated. And then we got this strong impulse move. Okay, guys? I got in the buy limit here. And then these 3 orders are all buy stops. Okay, guys? Because I want the market to shoot up. I want the market to shoot up. Now, right? Let's say the market, let's go back to the 4 hour. Now, let's say the market opened up, right? Excuse me. All right, we got this pending limit, picked up, order broke all these zones, which are entries, are buy stops. Now we're all in profit. Okay, guys? Now the market can potentially pull back. All right, guys? Could potentially pull back to retest these zones. It might not. This wick could push the market back up. But the market will come back, right, as a correction, because we have an impulse move right here. You have an impulse move right here. Come back for a correction and then shoot the price back up. And then once the market pulls back again, I look for potential entries. I zoom out. I go to the daily. What's happening? Okay, if the market breaks below this, that's my zone. Let me see. Do I see anything else? No, that's basically it. And then I will hold these trades, each order giving me about 100 to maybe 150 pips each order. And then I'll close and just basically keep taking profits to grow my accounts. Because the goal is to grow your account to be able to use those standards. You know, where you can't use those standards on a small account, you will blow that account in a heartbeat. Because you see all these wicks?
So where do you put your close at?
My take profits?
Yeah. Yes.
I got you right now. So let's say, for example, you got a small account and you got these and you're using a standard, right? These wicks are meant to blow your account. Okay, guys? So stay away from those standards. If you have a small account, stay away from those bigger lot size. Use risk management. Understand what lot size you should be using for your account, because these wicks will blow your account. I'm speaking out of experience, guys. All right, delete all of that. All right, so now let's look for take profits, right? Take profit. So I said I'm going for each order, I'm going for 100 pips to 150 pips. All right. Oh, excuse me. 100 pips. All right. So my first take profit should be around here. That's 100 pips, right? Let's bring it up here. Let's put it up here because we have a candle with the large wick came back up and retest the zone on a smaller time frame with this wick. So that's a level of resistance up here. So that'll be my first take profit. Let's change it. Let's change this color to let's make it aqua. Right, that's my first take profit. My second take profit. It'll be right here. Why? Because we had another large wick, which is hitting a resistance on a smaller time frame and pushed the market back down. So we got 1, 2, 3. Third one. It'll be right there. So we got 3, 4. We had a consolidation over here, so I'll take profit here. Because every time the market goes up every time the market goes up to a consolidation zone, you're gonna get a reaction. The market's gonna go back at least 50 to 100 pips the opposite way. So those are basically my take profit. I will go for 100 pips for each order. Or if you like, if you have patience, like Cash does, if you have patience like Cash does, your first entry right here, right? Cash will take this all the way up for a safe take profit at the 78. And he would have profit was that 461 pips. And that would be your take profit at the 78. And then
So,
next
question: Do
yes,
you guys use trailing stop losses?
excuse me?
Do you use a trailing stop loss at all in order to secure whatever pips you've had?
A stop loss? A stop loss?
A trailing stop loss. So you keep pushing it up in order to secure whatever pips you've got.
Oh, of course. That's a guarantee. Secure your profits always. Always.
So in a case where, remember you were saying that you would find that the market would retrace up to 50%.
Yes, the market will hit a level of consolidation like over here, right? Like see this right here? That's market. Once the market hits that level and there was consolidation in the past, you're gonna get a reaction from the market and it's gonna push it down.
Right.
Okay?
So in a case like that, where would your stop loss be?
So my stop loss, I will move my stop loss. Let's say my stop loss will be over here, right? This is the entry of my trade. Let me make this red. And your stop loss, it all depends on you. How many pips do you want to secure if the trade goes the opposite way, right? So let's say the market did an impulse move like that, boom, a large candle. Now you want to move your stop loss, let's say 50 pips.
Okay.
You can move it up 50 pips. How many pips is that? It's about 40. Let's move it up. All right, let's say you want to secure 50 pips. That's 50 pips right there. Boom. The market comes back and hit your stop loss. That's okay. You made money, right? You made money. The market came back for a correction. Always remember, the market came back for a correction. So that's giving you another opportunity to get in the trade, right? To get back in, exactly. So if the market came back, right? If the market, let's say the market did something like this, right? And it started consolidating over here. And then you have another breakout, get in that retest. Get in that retest. One thing that I like to do is I don't like staring at these charts. It gives me a heart attack. I get anxiety staring at these charts. So my favorite thing to do is to set alerts, right? I know some of you guys had questions how to set alerts.
You
So
use call levels, or
no,
you,
I do
because
not.
I don't trade off MT4. So
Okay. For those that use MT4, because I tried call levels before and I feel like it's a little lag for me because I want to enter the trade as soon as the market hit that zone.
okay.
So I really didn't like call levels. I find it better from MT4 because I think I get an alert a few pips before the market hits that zone. So I how to get alerts from your MT4. The only thing is about using MT4 as an alert is that you have to keep your computer on. Your chart has to be open. That's the only way you'll get the notification to your phone. Your computer must be on the charts. Okay, guys, so you go to tools, then you go to options, right? Once you go to options, you go to notification. Now over here, you want to make sure you check all these. Enable push notification, notify the trader transactions. Then over here where it says MetaQuotes ID. This MetaQuote ID, you will get it from your MetaTrader app on your phone. So where do you find it? You go to your app, the MetaTrader 4, right? You go to the setting. Once you go to settings, you go where it says chat and messages. Once you're in chat and messages, at the bottom of your screen, you'll see it says my MetaQuotes ID. That ID you copy and paste it on there. Now to make sure it's gonna alert you, just press test, and you'll hear something like this. Let's give it a test. That's your notification, right? And we'll do it again. That's the notification. Once that's done, press OK. Now, let's say this large candle just happened. Now I want the market to come back and retest this zone, right? I go to trading, I backspace, I go where it says trading, I'll go to alerts. I'll drag this all the way up here to this line. I put it before. Let's put it before. Double click. Make sure this is checked. You want to change this to notification. And then this is daily. Then we have daily candle retest. Daily candle retest. Okay. Now, when the market's open, tomorrow, when the market opens, and let's say it gap down, or let's just say the market just rallied down. Once it hit this zone, which is where my alert's at, I'm gonna get an alert instantly to my phone. Once I see that, now I'll get in. I look to either put a buy stop or a buy limit. It all depends what the market is doing. And that's how I trade. Anybody have any questions? Oh, we have like 14 messages here. Let's take a look. All right, 1 5 to 5 isn't an impulse move. Darwin, an impulse move is an Elliott wave. So let's say, for example, let's look for an impulse move. Let's delete all this.
Does the head and shoulder, does the inverse head and shoulder tell you that there's an impulse move about to happen?
Yes. So let's see. Let's look for one. I know I saw it here somewhere. Okay, let's move this to the line, try to see what it looks like. All right, and let's see, did it break below? Okay, look, we have an inverted head and shoulder over here, guys. All right, we got the neckline over here. Left, head, right shoulder. Right shoulder is the correction of this move right here. See that? Right? And if we put the candle, just like Chris said, there's always a harmonic pattern. So what harmonic pattern push this up? And we have this look like a shark pattern. The shark pattern pushed the market all the way up. And now that's the impulse move. We have an impulse move right here. And that's it. And then we got the correction over here. If you guys have any question on Elliot's wave, Cash is the man to ask.
I remember when I saw a inverse head and shoulders. I'm like, oh yeah, this market gonna go up, and it went up by a little bit and then went crashing down.
It depends what time frame you was looking at, because you can identify all these inverted head and shoulders on the 1 hour and the 15 minutes, but you're not looking at what's happening on the bigger time frame. Okay, when you look at it in the bigger time frame, the market, like for example, like the weekly and the monthly, right? If the market created a high, okay, if you see that this is a high, this is a strong high. It's a strong high. That means the market is not going to break that. The market is staying away from this high. Okay, so if you see a head and shoulder up here, you know the market is not going to break above that high.
Okay.
Okay, now if you go to a smaller time frame, let's look for one. You can see it. You'll see it right away. Let's zoom out. Give me H1. Let me see. Oh, perfect, right here. Right?
Yep, that's exactly what happened to me.
Right? That's exactly what happened to you. But you didn't notice on the bigger time frame that the actual inverted head and shoulder was this one.
Oh, that's crazy.
Was actually this one. And that was the left shoulder. And then if you zoom out, there you go. There goes your move.
So it's best to start looking at the weekly.
It's best to mark up your charts in a bigger time frame. And if you're a scalper, then
Yeah.
just make sure you on the bigger time frame you mark up your highs and lows.
Okay.
So that you know exactly which way where the market is trying to go. You know what I mean? Because the market is going to tell you where it wants to go.
Yeah.
Now, if you're looking at it in a smaller time frame, it's pretty hard to tell if it's going to go all the way up to the monthly's resistant or all the way down to the monthly's low. You're basically trading inside consolidation, and when you go to a smaller time frame. Okay, guys?
Thank you, bro.
Got you.
From a Jonathan to another Jonathan. Appreciate
You
it.
already know, brother.
Man, amazing. Guys, if you are having a good time, we're about to end it. If you're having a good time, if you learn some valuable information from Jonathan, Cash, Chris, I'm going to unmute you. 29 people, where are you going? So 5 people left. I know. We've been on here since 1. And it's, guys, come on. How often will you see a 3-hour webinar? Okay, a 3-hour webinar of straight value. Okay.
Wow.
Woo!
Man, I wish I recorded, man, so I could keep practicing. Keep looking at this.
If I just do it by myself or whatever, but I want to work in a team that wants to kill each other and we make this money. We got too much.
Let's make this money.
Listen, over $7 trillion go through this market.
Yes.
You want to tell me we can't get a little bit?
I love
We
it.
here fighting each other, killing each other for what?
Real quick. Perfect. Guys, what you just witnessed right now, okay? You don't even realize what you just been a part of. Okay, I hope you all can hear me. All right, this is nothing but straight nuggets and valuable, great. Yo, let me tell you what you just been a part of. of new and old traders, the development of a new educational team, a new educational platform. You know, we're creating educators. That's what we're creating right now. And you've just witnessed the rebirth. You just witnessed a new platform of educators right now. Okay. Everyone has their own style of trading. But guess what? When you tie it all together, it's amazing. So, are you guys ready? Dun, dun, dun. Are you ready to learn some fibs? Are you ready to learn some fibs?
Yes, that's one issue that I need help with.
Ooh. Oh my goodness. You guys ready to learn some fibs? Oh man, man, man.
And yo, Jonathan, man, I would appreciate if you be my mentor, man.
Of course, man. Just send me a message. If any of you guys have any questions, just shoot us all a private message and we'll answer them for you guys. Also, or you could do it in the group chat. In the group chat, we'll answer your questions.
That's right. That's right. Oh man, it's so beautiful.
Oh, you said you wanted to change everybody from Facebook to Telegram, correct?
Yeah. We want to take all of our new members over from our Telegram to from our Facebook to our Telegram, because if you're on our team and we're going back and forth, we post messages here on Telegram, post messages on Instagram, it becomes, hey, listen, we need to get organized. Come on, team. Let's get organized.
Agree.
Okay, it's too many groups going on. Before you know, you got a group over here, group over here. You're learning the wrong thing over here. You're learning the right thing over here. You're confused over here, and you haven't even mastered one thing yet. Haven't even mastered one thing. But when, you know, instead of having 50 groups, why not have a team of powerful traders in one group where we can all piggyback off of each other? That's value right there. No one trader is better than the other trader. I'm no better than Cash, Christian, Peter Franco, Darwin Young, Jonathan. I'm no better than any one of you. We all have our own trading style, and the end goal is to become a profitable trader. So, it's so many people knocking in on our door right now, trying to get into this group call right now. 28 people. I got messages right now. My phone is ringing off the hook saying, yo, let me in. I can't do that. But anyway, team, let's get it. So what I'm going to do right now, I know you guys been waiting a long time for fibs. Well, you've been seeing fibs just throughout this whole presentation. Okay? Cass been showing you fibs. Chris been showing you fibs. Jonathan been showing you fibs. Guess what? Their fibs is no different from my fibs. I just got a little more, when I speak, it's, I wake you up. It's no difference. But I'm about to blow your mind, though. Oh, my goodness, I'm about to blow your mind. Check this out. All right, team, we are looking at the DXY right now. We are looking at the dollar. So if you didn't have a chance, okay, if you didn't have a chance to join my, let me just turn the TV down real quick. I got the little one right now. He's watching Elmo in the room, and for some reason, he managed to turn the volume up on the TV. He's a marketing trader. I don't know how you managed to turn the TV up, but hey, you just like a market maker. All right, team, here we go. Let's get into it. So, yesterday, this is what we spoke about. And before we get into fibs, I'm going to show you something else that's amazing. So let's go to investing.com. So for those who didn't get a chance to join, didn't get a chance to join my Supply and Demand Friday yesterday, I'm just going to do a quick recap for you, and it's all going to make sense. It's all going to make sense right now. So for my news, guys, I'm not a news trader. But if I decide I want some, to watch the economical calendar, to know what's going on, I use investing.com. Okay, so now what we're gonna do is let's go to yesterday. All right, and I asked a lot of people throughout the day. I said, "Do anybody know what GDP, not GBP, Great Britain pound, but GDP?" All right, GDP. That's when money is being spent in your economy. Okay, we're talking about money is being spent in the economy. Well, car sales, food, restaurants, whatever it is, the more money is being spent, the economy is growing. So with yesterday's GDP results at 8:30, you see this, we have three bulls. Okay, let me just put this on mute because everybody's trying to get in, but they can't get in. They're hating on the outside. So yesterday's news, we had three bulls going on. Three bulls. And we say, wow, the GDP is up 2.3%. The GDP, as what they say, is better than expected. So what I like to do is click on it. So when the news come out, and we're only looking at the dollar, so I'm not versing the dollar versus something else. So that means the dollar should have rose yesterday. It should have gotten stronger. So this was April 27th. The dollar supposedly got stronger. Last month, the dollar supposedly got stronger. Okay, it broke even. Let's go back to January 26th when it was a negative number. So we should have seen the dollar get weaker. So January 26th, let's go over to the DXY. January 26th, 2018. And let's find my January 26, 2018. That's 8/31, 2018 is right here. All right, perfect. January 26, 2018. Guys, it's going to make sense. Just hold on. I know I should have prepared this while all the other speakers were speaking. All right, January 26, 2018, we are coming. Where are we? We are right here. Perfect. There we go. Let's get it. January 26.
You could format a horizontal line. Oh, great.
There we go. Nah, no need for that, Chris. You know what we're about to do, baby.
Yeah,
okay,
yeah.
we're about to show you something that's going to blow your mind. Woo! So you guys ready? We spoke about supply and demand. We spoke about fibs. We spoke about harmonics. But listen, the one thing the news does not have control over is that supply and demand zone. When price is low, woo! Oh my goodness! When price is low,
we buy.
You saw my Facebook yesterday when that person went up and tried to shoot the ball and Shaq just blocked it. Get that out of here! That rejection. Get that out of here! Come on now. Let's figure out what happened. Let's go back over here first. Oh, wait a minute. Jonathan and Cash, they spoke to you already about this. This is the daily time frame. So we got the market inside of a consolidation. Then we got a nice break, right? Switch to the line chart real quick. So I'm going to go ahead and mark up my supply and demand. There we go. Perfect. Consolidation, breakout. Ooh, it gets better and better. Ooh, we're gonna change this to green because that green is the money. Go get the money. Green is the money. And watch what happens next. Coordinate style. Let's go over to visibility alerts. Nope, that's not the one I want. I want to take this box. I got it. All right, that's my box, right? Perfect. That's my box. There we go. I want to stretch this box out to over there. Think we good? Yeah, buddy. So we're going to buy on this box right here. Remember, we're going to buy on the box. Oh, it gets better and better, team. Don't worry about the noise. They building the house next door to my house. They've been doing that all week. Oh my goodness, look at this. It gets better and better. So the GDP on January 29th said the news was bad. So what the news did was push the market down. It was bad news. So we had bad news. You guys can see what happened. Bad news pushed the market down. So we want to see this market break through, right? Not when we got this demand zone. Now whoa. This is not just a demand zone. This is what? This is not just any demand zone. Can anybody tell me what type of demand zone is it?
Fresh.
Oh,
It's a fresh demand zone.
like $1 million. That's right. Fresh demand zone. So when you got that fresh demand zone, go get the money. Go get the money. Oh, hold
What
up.
does that mean?
Look at that. Did we just do a reaction? Oh, no, we didn't just do a reaction. Hold on. So this market reacted off that chart right there. Oh, whoa. You saying to yourself, oh my goodness, I missed the trade. You know what I'm going to do because I missed the trade? I'm a retail trader. I'm going to buy right here. Oh, no, don't do that. I'm going to buy right there. What are you doing? Come back. I'm in drawdown. Well, you know what? I'm just going to go ahead and exit my trade. Well, guys, you already know when that market come down to a fresh zone, you buy on that second touch. Oh, it's getting hot in here. Oh, no. So you're probably saying, but Oren, it touched that line multiple times. Switch to your line chart. The line chart don't lie. Okay? That line chart does not lie. Okay? Boom. Market comes down. Oh, didn't Cash tell you about the harmonics? Didn't Cash tell you about the harmonics creates what? That W and M pattern? He told you about that already. You knew about it already. So hold on. Time out. What do we have here? Always, when you're looking at these charts, always. What was the last low? Switch to your line chart. Stop playing games. Switch to your line chart. Find the last low before the breakout. Okay? Find the last low before the breakout. It's right here. Okay, perfect. Now mark it up. Mark up your zone. I want to sell if the market comes to that level. Let's change that color to red. Oh my goodness, it's getting hot in here. Large candle, right? Consolidation, large candle. We know. Consolidation, large candle. Fresh, never been up there before. Oh no, come on, don't do this to me. This is a fresh zone, right? Fresh zone, baby. We buy at the low and sell at the high. We buy at the low, sell at the high. Come on, where's my take profit? Your take profit is at the supply zone. Where's my entry? My entry is at the buy zone, at the demand level. Okay, so why are you guys still struggling with this? Oren, where's my take profit? Where's my stop loss? Your stop loss is below the demand zone. Oren, where's my take profit? Your take profit is at the supply zone. But it's on the daily time frame. It's taking too long. Well, exit the trade. This ain't for you. Go work a 9-to-5 job. Because you don't have time and patience, you know you're going to get your paycheck on Friday, guaranteed. You're going to get your paycheck on Friday, guaranteed, when you work in that job. But you don't have the patience to sit in this trade for a couple days. You don't have patience for a couple days to make that money. But hold on. It just got hot in here. So hold on. Switch back over to that candle chart. Oh man, look at this. This is just ridiculous. Harmonics. Hold on. Oh no. I don't even know what pattern this is yet. Because D hasn't even formed. Okay? Let's put D down here because D hasn't even formed yet. Remember the cheat sheet Jonathan showed you all? Remember the cheat sheet? Draw your fibs. Okay? This market came to the 50%. Can anybody tell me, once that market came to the 50%, hold on, start typing inside the chat box, what do you think is going to happen? What pattern we at? You don't want to watch no more Elmo? Well, listen, Jason, I'm going to tell you something. If you come over here into the office, you can't be making all that hoorah. Remember that. I'm a market maker today. Your mother ain't here. It's just me and you. So if you come into the office, woof, I'm telling you. There you go. Someone says a Gartley. Okay. Perfect. That 886 ain't no joke. Here we go. So let's leave this right here. Most of you don't have patience for this. Uh-oh. Oh, wait. Before we do this, let's look at yesterday's news. Yesterday's news said that the news was perfect. Beautiful. We went up 2.3%. Better than expected. So, better than expected. Watch this. Okay, watch this. Better than expected. Hold on. Wait. Hold on. Remember we spoke about harmonics? Let's just put D right here for a second. All right, let's just put D right here. That's a harmonic pattern, right? Switch over to your line chart. Okay. Oh my goodness, there's something else there. Something else that just showed up. Let me just draw some more fibs. Guys, we're gonna draw our fibs. Okay, we're gonna draw fibs from the low all the way up to the high. And we should see a reaction at the 50 or 618 to push this market in the right direction. Okay, from the low to the high, 50 to 618. Now, if I want to see the extension, I'll just reverse my fibs in the opposite direction and just bring them back down. And if the market comes down, okay, if that market comes down to my 50, 618, 382, I'm going to write this down for you. 50, 61.8 / 38.2. My target is the 1.618. Okay, remember that. Perfect. There we go. Remember that. There you go. A and C is at the same level. Flat pattern. See, Ellie, you've been taking notes. I love it. All right. Cash already told you about the flat pattern. But there's something else here. There's another pattern that pushes the market up. It's a reversal pattern. There you go. Inverted head and shoulder. Left shoulder, head always sticks out by itself. Market comes up, boom, pushes the market up. Okay? Patterns within patterns. Look at the confirmations. We see that this market came down to the 618. Okay? See this market came down to the 50, 618, 382, right? We see right around here, we got a nice double bottom. We got a double bottom here, buying off of the demand zone. And then once that market came up to this level here, we see that this market came to the 618. Extra confirmation. But many of you don't have the patience for it. Okay? You don't have the patience for it. Here we go. Uh-oh. Is that another inverted head and shoulder? Whoa. Is that a bigger version of the inverted? Inverted on top of inverted? Oh, yes, it is. Oh, man, that's inverted on top of inverted. That's inverted on top of inverted. You can't get no easier than that. Let me clear that one out. Inverted on top of inverted. Well, we could basically do this. Look, it's the bigger version of it. It looks like Batman. Come on now. Let's see if we can measure this move real quick. We're going to measure from the head all the way to the neckline. Measure from the head to the neckline. And then we're going to copy this and move it up to here. Oh, no. Come on now. That don't work like that. Or you're making stuff up. So hold on. Before we continue, let me draw my fibs. From the high of right here down to the low. Okay, from the high right there down to the low. Put it right here. And look how my fibs is matching up with this level. 618, 618, 1618. Hold on, it gets even better. It gets even better. On the 27th, they said we had good news. But is that good news any match? Okay? Is that good news any match for a fresh zone? Ho! This is the current market. This is where we are right now. Immediate reaction. Immediate reaction. Unmute yourselves.
Woo! Yeah, boy. Go get the money. Go get the money.
Are you guys asleep?
No, we're not.
Get out of there.
Now, did that make sense?
A lot of sense.
Okay, you see what just happened? We covered everything in this one setup right here. We still don't even know what pattern this is right here. Hey, look what this market came to. X, A, B, C, take profit was right here at this zone, instant reaction. What pattern is that? Unmute yourself. Tell me, what pattern is that? Is that the Gartley? Then we had an inverted head and shoulder saying, hey, listen, I'm telling you, we got a harmonic pattern pushing this market up. I'm giving you the signs that an inverted head and shoulder pushed the market up. And then we did a beautiful measured move from what? The head to the neckline. And it told us exactly what was going to happen. But no, you ignored that. You know why? Because you were too busy watching Real Housewives of Atlanta. You were too busy watching someone on Facebook. No, you were too busy because your upline said, hey, listen, you got to recruit. You want to make money, you got to recruit. You know what I told my upline? Screw that. I'll make Chairman 10 money right here on the chart. I'll make Chairman 50 right here on the chart.
All right, how long is that?
From the bottom to the top?
Yeah.
From the rooter to the tutor? Oh, man. We got 44 days. 44 days, 297 pips. Okay? 44 days, 297 pips. Remember, this is the dollar index. What about UJ? Okay? Oh, baby! Woo! You guys see that? Anybody see that?
That
cup is smoking.
That cup is about to be on fire. Okay? Check this out. How many of you don't know what a cup and handle look like? Okay?
I don't.
Cup and handle. Okay? Cup and handle. Here we go. Right here. Here's the best version of it. Check this out. When you got your handle, this market coming here, boom, 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 goes up to this level. My perfect cup and handle, I need to see a round bowl. A round bowl. What do you see here? Inverted head and shoulder, push that market up. Inverted, push the market up. Regular head and shoulder brings the market down. What do you have here after that handle? You have a beautiful double bottom harmonic pattern, brings the market back down. Okay? Boom. There it is. So look at this, teacup patterns. Look at this, is beautiful, guys. This is beautiful. If this market break this zone here, this market breaks this, you're just going to do a measured move from the base to the top of the cup. If the market breaks the base to the top of the cup, matter of fact, let's go over to the chart. Let's go over to the chart. This is going to tell you whether or not this dollar is going to rise or not. Okay? Let's go from the base to the top of the cup. If this market, breaks this base, could we see the dollar shoot up to 115? Could we see the dollar shoot up to 115? Now
Yes.
you're probably saying like, Jesus Christ, 115, we only at 108, 109. Can it shoot up to 115? Go to a higher time frame, see what it looks like. See, you will never be able to tell whether it looks like it's going to go up on a smaller time frame. Go to a higher time frame. This is what it looks like now. Okay? Now you can start to see the overall patterns. Look at this. Can we see that dollar shoot up to those levels? If the dollar failed to break this zone, then we want to see this dollar come back down to 105, 103. What else do you see here? Switch to your line chart. Oh my goodness, what else do you see? Because a teacup is nothing more than this right here. What's inside of your teacup? Okay, what's inside of your teacup? An inverted head and shoulder is inside of your teacup. You guys see that? Inverted is inside of your teacup. The teacup is basically giving you the head. Here's your left shoulder. Okay, here's your left shoulder right here. Hey, Ralph, what's going on, brother?
Hey, what's up, dude?
All right, almost done with the webinar.
Oh, you're the webinar. Okay.
Yeah,
Okay.
almost done, and I'm.
Anyway, let me call you. I'll call you when I get on. It's going in about 30 minutes.
Perfect. Sounds good.
Okay. All right.
Another webinar after webinar after webinar. Teacup. Inside the teacup, what do you have? Inverted head and shoulder. The bowl, the cup of the tea is nothing but your head. Then you have your left shoulder. Boom. If this market comes down and hold this level right here, this is your right shoulder. Hold this level here, right shoulder. Could we see this market? If we fell on this daily time frame, if we fell to break this level and have this reaction, this could be our reaction right here. Look to your left. What do you see? Structure. Structure. What is the bowl of the teacup? Is your head. Structure. Then we could see this. This market go back up to the zone. But look at this. 1, okay, possible 2, possible 3. Okay, now if we got this move here, in order to push this market up, well, we need to make another higher low. We need to do something like this next. Hit that zone for the 4th time before we make that move. Is this starting to make sense, team? Is this starting to make sense?
Yes, sir.
Okay, I want to show you the overall moves. Let's get into fibs. Let's get into the fibs. Let's get rid of that teacup real quick. Let's get into fibs. I need someone to pick a pair. Any pair. Any pair. Guys, we are going on.
GU.
Guys, we are almost on a 4-hour webinar. And we're getting down to the end. This is nothing for me and Cash and Jonathan for a 4-hour webinar. That's nothing. We've did 8-hour webinars. Nothing. GU.
And I'll be there.
Oh, I like it. I like it. GU. Let's get into fibs. All right, guys, let's go on the monthly time frame real quick. What is Fibonacci? Fibonacci is nothing more. Don't complicate it. Okay? Don't complicate it. It's nothing more but support and resistance lines. That's it. Okay? Don't complicate it. Okay, 1 second. Ooh. Powerful. Powerful. That's right. Draw from the low. Oh, wait. I didn't even show you something on the DXY. Sorry about that. I'll be back, GU. DXY. There's another reason why daily time frame. Another reason why right about here. See this cluster of stuff right here? There's another reason why we stop right here and pull back up. Oh my goodness. Check this out. Check this out. See this right here? Consolidation. Box it up like some Chinese takeout. The reason why I switched to the line chart, it's a reason. Box it up. When that market came up to this zone, this level here, it shot up to this level, held this level, came back down. When that market starts creating a support level, all right, when that market starts creating a support and a resistance, support, okay, I'm marking my zone. When that market start breaking resistance, that's my zone. Now, Remember what Cash told you about that impulse move? Look at this. This was the move that happened. Draw from the low all the way up to the high. What level was this right here? Oh my goodness. What level was that right there? What level was that right there? Somebody tell me. What level is that right there?
618.
618. Now you see the reason why we had that reaction right here? With this cluster of stuff right here. Let me move everything out the way. Now you see? Look at that. Boom. Always know where you are. Always know where you are in the market. Oh my goodness. Oh my goodness. Look at that beautiful reaction, baby. Come on now. Oh, really? Oh, yeah? So this market is just going to come down to the 50 and have a reaction? Oh, really? This market is just going to come to the 382 and do an inverted head and shoulder, stop hunt to the low? Come on, are you serious right now? What did I tell you? Fibonacci is nothing more than support and resistance zones. Oh, yeah, look at this. Gets even better. Gets even better. Hold on. Let me get this. Backspace and delete all the garbage that I've been learning in my life. Backspace and delete all the garbage that people have been trying to sell me. 618. Boom. 50%. Major levels. Market always give you that 50% back. 382. Oh my goodness. Look at the wickety wicks around the 382. Switch to my line chart. See what I got. Oh no. Inverted head and shoulders. This 382 was a major level. 382 was a major level. Why was it a major level? Because the market came to this 382. They tried to fake you out. Market came to the 382, held the level, fake you out. Then they said inverted head and shoulder. Someone said, that's not an inverted head and shoulder. Look at this. Inverted head and shoulder? Yes, it is. Where are you trying to go? Yeah? Okay. That's what I'm talking about. Play with that. Play with that. That's right. Guys, the inverted head and shoulders everywhere. It pushes the market up. Push the market where it needs to go. Okay? Boom. False move to the low. Bring the market back inside. False move to the low. Bring the market back inside. Hold that level. Take the market up. Oh, you don't believe me? Measure move. Inverted head and shoulder. Measure move. Oh my goodness. Gets better. Gets better and better every time. Gets better and better every time. What if I bring this line down here? Oh my goodness. Get better and better every freaking time. Come on now. What? Come on now. But some of you got indicators for days on your charts. Some of you, your charts look like, it just looks like, okay? I can ask you, when was the last time you saw price? Price, what's that? I know what the indicator look like. Price? Price? Okay, GBP USD. Come on now. Oh my goodness, Fibonacci. When that market, find one large candle on your chart. Find one large candle. I don't care if you draw your fibs from the high down to the low of that candle. I don't care if you draw your fibs from the low up to the high. Where's that 50%? It's always in the same place. You see this 50% right here? You see this 50% right here? Switch to the line chart. Oh my goodness, look at that. Oh my goodness. The last low before the breakout. The last low before the breakout. What if I do this? Draw my fibs from the last low all the way up here. Now I'm looking for my 127 and this one here. And I'm looking for that 1618. Let me get rid of all fibs. Get rid of all fibs. Trading is easy. Trading is fun. It's just new. It's just new. I don't even know. Oh my goodness, look at this. The last low before the breakout. The last low before the breakout. What do you see right here? Somebody unmute yourself and tell me, what do you see here? What do you see?
Inverted head and shoulders.
Inverted head and shoulders. The market don't lie. The market don't lie. Left shoulder, head, false move to the low. Whoa, why did we stop right here? Okay, you hear that, Jason? Even Jason said, ooh. All right. What was I going to draw? I forgot what I was going to draw. A nice box right here. I was going to draw a box right there. Push this market over. Bring it back. Push that market over there. Okay, perfect. I like that. I like that. Boom. Let's cut this off and see what happens. Let's cut this off right here. I don't know what's going to happen. I don't know what's going to happen right there. Somebody else picked this pair. I didn't. Switch to the candle chart. Let's see what happens. Ooh. Hold it, baby. Oh, spike to the low, spike to the low. Oh, come on. Is that my left shoulder now? Let me put a line here just in case. Because I see that when that market spike out like that, just in case. I don't know. I'm just thinking outside right now. Thinking out loud. Okay. Go get some more money. Oh, impulse. I remember that day. Yep. Close that gap. Yeah, they held that low for a long time. Oh, wait. Where are we? Whoa, reaction. Reaction in the market? Hold up. What if you had a sell limit right there? Reaction in the market. Oh my goodness. You see that, team? Reaction in the market, 116 pips. Would that be okay?
Yes, it would.
Yeah, yes, sir. 116 pips straight off that reaction because of what? This right here. The last low before the breakout. Instant reaction. I don't care about this big bullish move right here. This big bullish, you big bully. 116 pip reaction. Okay? Big bully. Okay? Big old bully. Whatever you do now, I caught my 116 pips. Yes.
We had two touches, right? Where you drew the line.
Yes.
Where you drew that horizontal line, there have been two touches. So just before where you had that third touch, where you had that breakout, could you have put a pending order there for a sell stop?
A buy stop? Oh, you're talking about over here.
Between September and October.
Okay. September.
But you had one, two, that would have been your, no?
All right, September and October. So you're talking about selling here.
Closer to where okay. You're right about there.
Okay. So you were talking about could we put a sell stop around here? Look at this. Boom, 1, 2. Here's my third touch right here, right? My third touch right around this zone. The market broke out. Okay. Remember what we spoke about before. Whenever the market drops down, put a line, right? Put a sell stop maybe 5-10 pips below. Okay. Market came down here. Put a sell stop 5-10 pips below. Didn't touch you. Didn't touch. That market came down. It entered you in the order. Now you want to know, where's my take profit going to go? This is when you pull out the mighty fibs. Okay? The last low before the high. Draw your fibs from the high, from the low to the high. Oops. From the low to the high. Let me just draw them the other way because you want to see that extension. 1 second. Let me bring this back over. Because I got something powerful to show y'all. From the low to the high. You want to see? Stop doing it. Why do I keep doing that? Maybe my fibs are backwards. No, it's good. From the low to the high. Now, this is the daily time frame. If this market broke this zone here, that's the 1618 right there. Jason, stop it. This would have easily gave you, what, 70 pips. For those who like to use trailing stop losses, there you go. Okay, there you go. Trailing stop loss, you could have stayed in that trade. Then you switch to the lower time frame to manage the trade. Okay, Jason, what's going on, my brother? What's going on? You want to go? Do what you got to do. Okay, 618. You could have put a sell stop, but then, you know, when you put that sell stop, just make sure you put it 5-10 pips below the current low. Okay, perfect. And also, remember that 618 is a beast. That 1618 is a beast. Check this out. We're talking fibs right now. Guys, we are talking fibs right now. Someone once told me, they said, Oren is the only person that can tell the truth while telling fibs. So most of you didn't get what that means. Don't worry. I'm telling you.
I got it. Click on the fibs.
Okay. I'm telling you the truth right now while showing you fibs. Watch this. Draw from the last low to the high. Look at this 618. Look at that 618. Let's put this back up here. And as we move the market, the moment the market, 618 right here, team. Oh my goodness, it's beautiful. We're going to buy on that green. The moment the market break that 618, coming back up, retest, that's your buy right there. That's your buy. And you're going to see it again. Now, let's continue. Can you imagine? Look how it's holding the 618. You're saying to yourself, hold on, Oren. You lost me real quick. You lost me. Don't worry. Just like Finding Nemo. I got you. Turn off all distractions real quick. Now I'm about to blow your mind. Okay? The last low before the high. The last low before the breakout, right? All you're going to do is measure. You don't need your fibs all over the board, okay? You don't need your fibs everywhere. Put your fibs where you are, okay? So what I'm going to do is drag my fibs from the last low all the way up to this zone here. Remember, that 618, that 1618, if you break the 1618, wait for the retest and drop. If you break the retest, wait for the retest and rise. That 1618 is powerful. Watch this. As we shift the market over, look how the market breaks through 1618, retest. Notice something, team. Notice what I didn't do. Notice I left my fibs over here and I'm not drawing any more fibs. But if I did want to draw more fibs, I would start from here and drag it all the way down. And what am I looking for? You see that 1618 right around this level? Okay? That 1618 around this level. And also that 127 is a powerful number as well. 127 on this side and that 1618. That market came down on this side on the 127 and is holding that level. So as we continue to push the market, remember this 618 right here. Still trying to hold that 127. Now it's holding that 1618. Now it's holding that 1618. Now, just a reminder, you can do this on a smaller time frame as well. 4-hour time frame, 1-hour time frame. Oh my goodness. Do you see what's being created right now? Do anybody see the pattern that's being created?
That W.
Which one? Well,
Inverted head and shoulders.
there you go. You see inverted. It's not the best looking, but I'll still date her. Okay?
As long as she's paying, right?
Hey, she's paying this bill. That's right. Measured move. Oh, whoa. Hold up. When did I draw this red line? Well, whenever I drew that red line, it's right there. Put this right back where it belongs. There's more money down there. Hold up. Did they just give you another one? Hold on. Time out. Did they just say, wait a minute? Wait a minute. Hold on. Draw your fibs. I'll draw them the right way for you. I'll draw them the right way. From the low to the high. What level is this?
That 618.
That's 618, right? 618. And you probably see me draw double fibs all the time. 618 and the 382 is the same number. So I like this 1618 right here. Okay, so I'm just going to put a level right here on this 1618. Put a level on that 1618. You know we love that 1618 and that 127. So let's go ahead and play the market. Well, we got that 127. We smashed that 127. Oh, smashed that 127. Oh, that's beautiful. And they said, let me go back. We're still holding that 127. Oh, that 1618, baby. We smashed it, but again, a lot of you, now we in this zone. What are we doing? Oh, no. We just smashed that level. Hold on. Remember that 50?
Or if I may ask, like, how do you keep checking these charts? Because these, like, I'm looking at the charts and like, there's November, December, like that's a lot of months.
You ever heard of alerts? There's no need to stare at your chart 24/7. You wait for that alarm to go off. You know, I know we got a lot of scalpers here. If you're a scalper, well, you can make a lot of money scalping. If you're a long-term swing trader, you set an alert. Ring, ring, ring. Oh, now I get the chance to look at my charts. Ring, ring, ring. Oh, now I can look at my charts. Ring, ring, ring. Now I'm going to look at my charts. Why are you staring at your charts if you're a long-term trader? Right, Jason? Even Jason thought that was funny. Where's my 50%? Don't forget about that 50%. 50% right here at the top of that. The market's going to give you that 50% back. They smashed it. And look what happened. Look what happened next. They're still holding that level. Oh, let me go up a little bit more. And this is where the current market is at right now. Look at this team. Look how we just built something right now. What was this right here? Wasn't this that 1618? Can we see this market extend back down to retest that 1618? Oh, I just gave you a setup. We are currently 83 pips away from that 1618. Let me move this box out the way. What's up, Jason? I know. You upset because they're not understanding, right? We're currently, there we go. Let's get this one out the way. Now, this is when you clean up your charts. It's when you start to clean up your charts. Right here. What's up? What's up, man? Let me give me 1 second, team. We're about to end this right now. We've been on here 4 hours. 4 hours. Okay? 4 hours and still rocking with the same team. Let me hear everybody type in 4 hours. I can't hear you typing, but okay? Even Jason is getting restless. I'll just go ahead and put this box right here. Why am I putting that box right there? Because if I switch over to my line chart, look what I got. This. There we go. And now, find your zones. The market dropped down. Look at this. Watch this. The market found a high, came down and found a low. There's your zone. Mark up your zones, team. Zones. These are your zones now. It's time to clean up the charts now. All right, guys, we had a lot of fun. Let's clean up the charts. This is what I like to do next, is clean up my charts. Because the moment the market moves out of certain zones, now I need to clean up. Okay? Perfect. So now, market went up, came back down. Okay? Find a zone. Find my zones. There we go. Here's another zone. There you go. It's not difficult. Instead of having many indicators, just mark your zones. Okay? You know, these are zones. Boom. If you live in Atlanta, that's zone 6. Okay? Look what happened. The market found a low, went up, found a high, found a low. Now guess what? Mark your zones. Mark your zones. Marking zones are so much fun. Okay? You know, you can get creative with it. Look at this. What zone you live in? Okay? I'm in zone 2. Now you can see, what zone is this? Okay? Zone 1, zone 2, zone 3. Look at this. Zone 4. We're in zone 4 right now. Okay? Zone 4. See that? Simple. Simple. You guys just learned something right now. Creating your zones. Creating zones. Okay? Zone 4. Perfect. You guys like that? Look at that. Zone 1. Here's your lowest low on the bottom. And now, for the grand finale, what you're going to do is, here's your high right here. Here's your high. Grand finale, team. Draw your fibs from the high all the way down to the low. Where am I? Where am I? Switch back over to the candle. There you go. Always ask yourself, wow, it makes. Now we're about to reach the 50% of the entire move. Jason, you just unplugged my mouse, man. I think he's sleepy. I know. You just unplugged my mouse. Okay, perfect. That's the 50% of the overall move. Zone 1, 2, 3, 4. You see that? Beautiful. Now with the overall move, okay, this is it. I'm almost done, Jason. I'm almost done. Market drops, find the last low. Here we go. 127, 1618. Look where the 1618 falls. Right here. Perfect. Perfect. Last low before the breakout. Look where the 127 falls. Right here. Okay? Last low before the breakout. Let me get this out of here. There we go. Last low before the breakout. Gotta make my fibs a little thinner. There we go. Okay. Last low before the breakout. What I want to show you is when that market break out, look at the 127 and 618. That market breakout, come down to the zone, it retests those 127 zones and keep dropping down. Market drops, retest the 127, 1618, drop down. The market drop, retest the 127, 127, and then now we know that we got a reversal. It breaks out here. Look at this. Now you're starting to build it like Legos. It breaks out here. Here's your 127. Retest that 127. Now we got a reversal. Now we got a reversal. Now we got a reversal, taking the market up. Does it make sense, team?
Yes.
So, Oren, basically, since this is the retracement of that big move right there, it wants to give us at least 50%, correct?
That's right.
So what we see is every time it drops, it retests that 127, 1618, and then it moves up to the next level.
That's right. You see that, right? You see
Every
that?
single time.
Every single time it does that. Boom. Come down to that 1271618. Move up to the next zone. Boom.
Yo, Oren, if I didn't know you, I'd say you a wizard, bro.
Oh man, guys, get your screenshots. Get your screenshots if you need them. Just show everybody what we just learned here, man. This is market structure. This is structure right here. And what I want you to do is take what you learned, make it yours, and make it better. Okay? Make it yours and make it better. Chaz, just remember, this is a 4. Hey, listen. I know it's over. It's over. It's over. It's over. That's it. Remember, it's a 4-hour webinar, so it's going to take a lot. It's going to take a while to render, to upload this. I want to thank all of our traders. Okay, guys. Woo! Thank all of our traders who came in tonight. And I want to thank you, the viewers, the fans, who stuck with us. We started with 27. We ended with 25. That's funny, Jason? So I'm going to go ahead and unmute everybody. Woo! Team.
Yes,
Yeah,
thank
boy.
you guys.
Thank you so
Thank
much.
you so much.
Thank you
Yo,
all
I know we did
and
this already,
everybody.
but big shout out to Cash. Cash is such a great guy, man. I've hit him up a couple times, and he's given me the information I needed. So big shout out to you, bro. You're amazing. I appreciate you.
Yes, sir. Yes, sir. Cash, Jonathan, Chris, you guys, I mean, you make my job easy. Okay? You guys make my job easy.
Thank you, Oren, for pulling it all together.
Hey, you're welcome. You guys came at the last minute. It's nothing like last minute trades, what is this thing called? Last minute. We always do things last minute, but it worked. Okay, it worked. So guys, thank you. Let me go ahead and upload this right here. And I'll see you on the next. See you on the next one. Take care, guys. Oh, wait. I'll see you all on Market Recap tonight, 8 p.m.
Definitely.
Perfect. Market Recap.
Is that a different chat from Talk Trade and Analysis?
No, Market Recap is on IML TV.
Oh, okay. All right. Awesome.
All right. Perfect. All right, guys.
Thank you, Oren. I appreciate you, man. This is Peter Franco, by the way. We'll be talking one day.
Yes, sir.
You heard me talking to you.
What happened?
What time are you doing today?
Oh, okay. Have a good night, guys.